Are interest rates about to go through the roof? Andrew Sentance, a former member of the Bank of England rate setting committee, today announced that he believes interest rates will double by the end of the year. Previously, the Bank of England had announced that it believed interest rates to double by the spring of next year, somewhere around March. But Andrew believes that the situation with inflation is so dire that they will in fact double by the end of this year. Add to that the fact that energy has increased so much, with one rise back in April, another in October and another one in January, taking the price cap to a predicted 4,400 a year, which year on year from this time last year or before the 1st of April will be an increase of 365%, making life very, very difficult for homeowners, mortgage payers and consumers of energy across the board, of course. So what's the situation with borrowers at the moment? As many of you will be coming to the end of your deal, you will be finding that a lot of products have been pulled. Some of the cheapest deals have all disappeared, and there are very, very few deals at the moment because the banks themselves don't know how things are going to go. The other issue is, for those of you who had borrowed heavily at high loan to value rates over the last couple of years, is that as the interest rate hike bites and property prices correct, not necessarily collapse, but just correct, because there are pockets of the country where property literally was being sold over and above its true value because of the buying frenzy. Once that corrects, you may find that your loan to value combined with your affordability stress test will mean that you are very limited on which lenders you can switch to, if any. Some of you will be stuck with your existing lender and whatever deal they offer you, should they choose to do so. If there is no deal on the table, then you will be forced to stick with the standard variable rate, which can be even higher. So currently there are deals of just under 4% on a variable rate. You could be looking at 5 or 6% or even more. That would be a dramatic hike from the 1 or 2% fixed rate that you took out when you bought your property. The good news is that this is not the 2008 crash, this is not the 1970s. The circumstances are completely different. Our economy is very robust, very buoyant, and let's bear in mind that the largest factor in the rise in inflation, possibly around 70 to 75% of the contributory factor to the current inflation rate, is energy, which is beyond our control. Well, it's beyond our control because successive governments put us in a position where we became dependent on imported fossil fuels from other countries, but that's another matter. The point being that wherever interest rates peak, I believe that our economy will recover, inflation will be under control, and I do believe that by the back end of next year we will be over the worst of it. So depending on when you bought and how long your deal is, you may be lucky and come out of your deal at the tail end of this blip in interest rates. In the meantime, who knows how high they will go, but the best thing that I would advise you to do is to take the bull by the horns, get a notepad and paper and do your sums and work out some worst case scenarios and plan for the worst, hope for the best. That's all for now. I'll have further updates for you in another video, and I'll see you next time.